The next video in the iBid Plus bid methodology series covers bidding strategies in determining your company's markups. The risk-based allocation strategy is the best method to use to recover your overhead. This is because instead of applying a fixed markup to all items, it allocates overhead based on risk. Material, being low risk and easy to calculate, should have a lower overhead markup percentage compared to labor, which is the most risky. The first step in the process is to establish a budget. Here we see A Landscape Incorporated's projected annual budget. Notice the fixed expenses for the year are anticipated to be $250,000. This is the target the company will shoot for to recover. Step 2, start with the material markup. This is the easiest item to calculate. Since it's the lowest risk item of a bid, we will start here. Based on the competitive marketplace, the value your company offers, and your experience, choose a percentage between 10 and 40% to start. In our example for A Landscape Incorporated, we have selected 20%. Step 3 is set an equipment markup. Equipment is moderate risk, ranging between 25 and 35%. Based on industry research, we have determined this to be the standard range. Once again, we will select 30% for A Landscape Incorporated. Next, set up a subcontractor markup. This varies extensively. This depends on task and by market value. We will use an average of 20%. The wide range throws contractors off. Items that can contain a big markup, such as smaller tasks, can bear 100% markup, whereas a large pool that is already priced at $200,000 may require a smaller markup to be competitive. We will use 20% for A Landscape Incorporated as an average for the year. Next, estimate the sales for each of these categories. Here, we anticipate materials at $150,000, equipment $75,000, and subcontractors $25,000. Thus, by applying the markups we selected in the previous screens, we calculate the following. Remember, we selected 20% as an overhead recovery markup for material. Thus, by calculating $150,000 times 20%, we arrive at $30,000. We do this for similar items. Thus, the anticipated overhead recovery is $52,500 using these percentages. With a budgeted overhead of $250,000, that means we need to recover $197,500, which leads us to the next step. Step 7. This is where we plug labor. The overhead remaining, remember, is $197,500. Thus, our projected annual cost for labor is $300,000. This is based on historical information. If not, it can be calculated by determining crew sizes and multiplying them by anticipated hours and labor rates. If we anticipate our annual cost to be $300,000, we need to multiply it by a certain percentage to recover the remaining $197,500 of overhead. Thus, we do the simple mathematics, as shown below, and arrive to a rounded 66% for labor markup. Finally, adjust this percentage as necessary. And remember, this is an ongoing process to be constantly monitored and updated throughout the year. Do not set these percentages at the beginning of the year and ignore them to find out that adjustments were needed to recover the appropriate overhead throughout the year. The next video in the sequence is determining profit.